Welcome to Wall Street Confidential, the show we give you the inside scoop as to what's really happening on Wall Street. I'm Greg Greenberg, and joining me today is research manager at TheStreet.com, Dave Peltier. Welcome, Dave.
Thanks for having me.
It's good to have you. Okay, we had a GDP number of 1.3%, way below analyst estimates, but it doesn't seem like it's perturbing the market too much. Is that because people think, hey, we might get that rate cut?
I think this pretty much takes a rate cut off the table right now, especially when you look at the inflation data that came along with the GDP today. But at the same time, there's still, whether it's M&A activity or whether it's the admittedly better than expected earnings this quarter, there's still a lot of folks out there that there's a real buying pressure to this market.
Okay, it also seems like the personal spending number was okay within this number. So it seems like the consumer is holding up, and you're getting signs of a housing bottom, also buoying the market.
I think it's, again, a little too early to call one way or the other. Either that we're going to get a rate cut. Housing clearly hasn't bottomed, in my opinion. Although some markets like New York, very strong still.
Well, you get those investment banker dollars always underneath the market. You always have that buying power there.
Never hurts. It never hurts. But again, my opinion since the beginning of the year, and I'm sticking to it, is that we're not going to see any rate action one way or another. And with each quarter or each month, every time we get a number, you get a good one, you get a bad one, you get a good one, you get a bad one. And so far, that's been playing out. All
right. Kramer was saying make rate cut. We'll see if he's right. Also buoying the market, especially the NASDAQ, is Microsoft. That stock's up about 4% to $30 on some good numbers. What do you think about those numbers?
Numbers were very good. And really, it's the interesting thing about Microsoft this quarter is everyone had been saying since, well, Intel is saying people aren't buying more PC chips. That must mean Vista's not doing well. It turns out Vista's doing just fine. It's just that people aren't buying more computers or more chips. They're not really upgrading the hardware because of it.
Microsoft, a value stock, it's actually trading at a market multiple 7 times 2008 earnings. And you're a value, you run the value investor portfolio here at TheStreet.com.
I do. I think the company's just too large to be a value stock right now. But with the cash on the balance sheet, it's not unattractive.
$26 billion in cash.
It's a nice cushion.
All right. It also got an upgrade. There's an analyst saying it has a price target of $36, currently at $30. Can it get there?
I think that's a little aggressive, at least over by the end of this year. Looking at 18 months, the product cycle's still very strong there. Over the shorter term, I actually like IBM better on the value side. They just announced a big buyback this week, a nice little dividend boost, and I think IBM will actually outperform Microsoft over the next 6 to 8 months.
All right. Well, thanks a lot for being here. This is Dave Peltier, research manager at TheStreet.com. I'm Greg Greenberg. You've been watching Wall Street Confidential.